Hello, good morning. This is 4:53 a.m. and my name is Michael Essien. I'm here to give you a very important news and update. Okay, I'd like to start by welcoming you here to this channel. I want you to follow me closely. Okay, so uh, this morning I want to bring serious good news because I've been doing some very private research as well, and of course whatever is good I was going to bring it here so that you can learn, you can benefit, and you can be profitable. Okay, so let's look at this together. Now remember that this as you can see in my screen, this is the setting of the setting we have that we use for trading crash and burn. But okay, some of us, we seems to have issue with entry. That is always a problem, entry and exit. So there is a support strategy, there's a support indicator, not necessarily a new strategy, but this does not work in isolation. I'm going to talk about it extensively, so follow me closely. Okay, then where you don't have clarity, you can drop your question in the comment section of this video. Okay, so let's get to talking about it. So I want to talk about support strategy indicator for entry and exit of crash and boom. Very clear. And the the strategy, or sorry, the indicator in question is the Williams percentage range. Now let me say this emphatically, that this Williams percentage range does not work in isolation. You need knowledge of price action, okay, or let's say support and resistance. I've said in my previous video that price action is a function of support and resistance. Okay, so but then, so you don't need just the Williams percentage range, you need to marry it with resistance and support. So let us look at how it works. So what's the checklist for entry, crash and burn? Remember that this does not in any way destroys the previous video I talked about entry, but I'm trying to see how I can make our entry more closely tightened. Okay, because the previous video, my previous teaching, is still 100% okay, but then the challenge is that some of us do not understand how to use that for entry more accurately. So this is what I want to introduce to you. So first and foremost, we're going to do a little setting. If you see, this is the original setting we have, but we're going to add up another setting. So you're going to have two windows, and I will use opportunity to explain to you how you can have two different setup in one MT5. So follow me closely. What I'm going to do is I'm going to use here. Okay, I need the brush. So what I'm going to do is I'm going to if I'm not making a mistake, okay, fine, that's what I wanted. Thank you. Okay, it's fine. So what I want to do is I'm going to tap here where I circle. Okay, so that's a window, that's a double window. So I'm going to tap there and then we will continue. So look at that. So what I'll do is I will tap here and you'll see new window. Okay, so I'll tap on new window. Now we have two windows, so I'm going to tap here. I will press and hold on the second window, and then I'm going to tap on the arrow, the hash arrow pointing up. So this will become my new window. What happens to the previous one is still there. If I tap here, I say tile horizontally, I can go back to the previous one, but let's work with this one because I want to make these settings for us. So we have a fresh window. Okay, this is purely no indicator, nothing. So because of the Williams percentage range, and remember you can add it to your previous window, but I don't want it to be too bulky. I want you to have the privilege of comparing these two different setup. Okay, so this is still the same, it's still my setup, and it's still the same thing, but I just want you to to have the flexibility of switching your windows. Okay, it doesn't change anything. Now What I'm going to do is I'm going to start doing some setup. So what I really need is I'm going to need some indicators basically. So I will use 200 EMA is needed. Exponential doesn't change, the same thing we used in the previous one. I will add another moving average, and that is important. That will be 22. Exponential weighted close, color will be blue. Can make it 3 pixel. Okay, and then we're going to use we're going to add another one, another moving average, and that will be 10. Okay, apply to close down, the color will be red. And then we're going to add, okay, there is another important moving average. I'm going to add it, and that will be 9. Okay, and I will use this color. Okay, so that's it. I'm going to talk to you. 9 and 10 are almost the same thing, so you can use it, you may not decide, but I'm just going to explain to you why we use 9. 9 is more closer to the lows, that is previous lows, or call it, in this case, it's more closer to higher lows than the 10. They're almost the same thing, there's just not much different, but let's just put it there. So after that, this is all we need, and then we need this one. This is where the crux of this study is. So we come here and then we add the Williams percentage range. Look at that, WPR. Okay, so we have the Williams percentage. Now look at it. By default, this is what you're going to see. You're going to see 14. This is how your own will look like if you're coming here for the first time. So, but we're going to change the period to 13 and then change the pixel to 3. We use blue color here. Now look at where the level, where it really matters, the levels. So this is minus 80. We'll leave it like that. We're just going to add maybe 3. So after minus 80, we're going to have minus 95. We're going to add minus 5. Take note, it's not 5, so that it will show minus. Then we'll have minus 50, and then we'll call we put it the way I have put it. Pivot point. Increase this to 3 pixel. Color is blue. Okay. Color is blue. Okay, we can still, so that we don't have the same color, we can use red. Okay, let's use red. Okay, no, it's fine. Let's use black. Okay, so that's fine. So this is all you need. Okay, so this is all you need for your entry in crash and burn. And let me say this very emphatically, that the Williams percentage range is almost like the stochastic oscillator, but the difference is that this one, the WPR, that is for Williams percentage range, is more sensitive to a market closing price as it relates to the high low range, okay, over a specific period, usually like 14 days period, like what we saw. In our own case, we're using 13 period. So now it's basically an ideology of how to calculate your your closing high or your closing low over a period of time, but this time you're using overbought and oversold, a movement it gives naturally. Are you following? All right, so having said that, let's get to how we apply it. So we're going to come back here, but that is all you need. Okay, so please set this up in your second window, or you can just add the Williams percentage range in your current window. That is if you don't want to do the double window, but why I'm doing the double window, so that you can, that is how I do it, so that I don't conflict with my previous settings. So I come back here to explain to us. So you want to sell crash 1000 or crash 500. How do you use the Williams, that is this indicator now, to gauge your entry more accurately without excessive drawdown? Okay, so the first thing is you must use your previous knowledge of determining major trend using my previous video. How do you know a major trend? When the candles, if you want to know a bullish trend, the candles must be above and the 48 SMA must be below. That must be trending below the candles, and then there must most likely in H1 be a cross of the red and the blue, and then the candles will be above the cross. That's how you know that the trend has changed and it's now a bullish trend. Okay, now number two, you have to clearly draw up your support and resistance. I've said this in my previous video that as a trader, the first thing you do each day when you want to start trading is you draw support and resistance on higher time frame, maybe H1 and H4. You just mark them because those are points where market prices will likely react because of history. So you have to draw up your support and resistance clearly on H1 and H4, and then let us see how it helps us. So now there's going to be time frame alignment, and this is where the crux of this new tweak, entry and exit tweak, comes about. Make sure that M15 to H4 is all at -5 Williams percentage range. Let's go back there. So let's go to M15. But first and foremost, we're going to draw support and resistance. So let's come to H1 and see if we can spot resistance and support. Sorry, I had to put my phone on a flight mode because of too many messages that comes in. I don't want any distraction now. Okay, that's why we don't seem to have an active market. But be that as it may, so we try to spot resistance and support, or where we have price rejections. Okay, I like to use Crash 500 and see if that will help us. Okay, so this is Crash 500, and I think this is H4. So let's try to draw support and resistance. So I've seen a clear area here. Okay, so I've seen a clear area here. So that looks like what? Okay, that looks like resistance. Okay, and there's a lot of rejection, price rejection. That's why we had this long sell on Crash 500. Now let's go to, that is H4. Let's go to H1. You will notice that that place is marked. Okay, it's marked. We have rejections there. Now if you come to H4, okay, so we have this. So okay, let's use this first example. Please follow me closely. Okay, you see where price rejected at that point. Okay, so I want to use it to explain the strategy. That would have been our entry for a long sell, right? Good. So what do we do? This is what we do. Let's go back. Now, time frame alignment, make sure that M15 to H4 is all at -5 Williams percentage range or close to. At worst, H1 should be at -5, and emphasis, and there must be a visible resistance zone there or price rejection. So let's go back. So this is H1. This is like a resistance zone, and the price rejected several times around here where I'm drawing this, right? Now look at another thing. Okay, now look at this. First rule of engagement is that this is actually at a resistance zone. Okay, and there are price rejections. The second thing is that when you look at your M15, if you go through from M15 right now to this H1 where we are, you will discover that the Williams percentage range was at -5. That is to say, they were overbought from M15, M30, and then H1 now. Were all around here. When you see that alignment where M15, M30, H1, and in some cases H4, they are all here. And then this place, that is, they are all at -5 WPR, and at the same time you can spot a resistance at that on the main chart. That is where you can place yourself comfortably. That's your entry. You place yourself comfortably, because this signifies that price, has gone to the high. Has gone to the high. It does not necessarily mean overbought. It means that price, in the case of this overbought, it means that price, is near the high of its recent range. It does not necessarily mean it is overbought and that price will begin to come back. No. It's only telling you that price, has gotten to, the high of its recent range. And if it were to be, you were looking for a buying opportunity, that is, and this represents oversold, like in this case, what it means is that price is in the lower end of its recent range, like here for this one for this one. So there must be a clear resistance or support at your point of entry, and then that must agree with where your WPR is. In this case, we have it here. So what am I trying to explain to us? Make sure, let's go back. So when you've spotted that, how do you make entry? Make entry when you find a curve back down from -5. That is for a sell situation, or an M from the top of the WPR. So what does that mean? When you find price coughing back down, this is what it means. Price, in this case, you would have waited. This would have dropped, like in this case, but that is not it. You wait for price to cough back. So price went back up to that place and then come back. In this case, it has formed an M. I'm sure you saw that. That's what the thing means. When you find an M forming around that top, just begin to sell, because it's the last leg of the M is going to drag it down. It's as simple as ABC. Trust me. Now, the same thing for W. Don't ever buy if you don't find a W. Like what you're seeing here is a W. And this is even in H1. This is a W. So what you find here is an M. This sell that happened between here and here, look at it, is because of this M. I'm sure you can see. So there is a phase movement. Remember, this is like a zone. Oh God. This is like what? A resistance. Now, price came. There is a curve. You see that? That M must be there. That M must be there. So the first one is that it moves. It came back, went up again, and then came. This is a function of price action. So the same thing applies here. So until you find this M around here. Now why I use -5 is -5 is sometimes the extreme case. But from -20 is safe. But if you are lucky to find it at -5, wow, then your entry will be spot on. Okay? So that is that. Now let's go to M15. Let me take you through the journey from M15. Please follow me. Okay? All right. Now look at where the thing started. Now with this, you will also know, please follow me closely. Listen, because I did not write it in the notepad. This market that is ranging can be detected. How do you know that a market is going to range? It's going to range if M15 and M30 is at -5, but H1 is not close to -5. So the M15 and the M30 will do something like, we'll try to bring it down. But because the because the H1 is still far, maybe the H1 is around here, it will go back. It say, no, my pressure is stronger. H1 is stronger than M15 and M30. But because M15 and M30 are already on 5, they will bring it back. H1 will continue to climb until all of them aligns before a proper sell begins. That was what happened here. That's what causes a range. Take note of what I've just said. That's why you will see this kind of jagged movement. It's because of the range. And what causes the range again is when there are no alignment of M15, M30, H1 at -5. When the first two, M15 and M30, are at -5 and H1 is still dragging, look at my screen. So this is where -5 is. But the first line is M15. The second line is M30. If H1 is still here, the fact that the M15 and the M30 is back there, you can use it to scalp. If you sell, this will push price down, but because this one is here, we say go back. Then this one will push it down. By that time, this one is already here. It will say go back up. So that is how the thing will be dancing till finally all of them are now at the topmost top before you now finally come down. That's what causes a range in any market situation in this case. Now remember that this strategy can be used to trade anything completely. Can use it to trade anything. Remember, it's about entry and exit. So now we're done with that. So that was M15. Let's go to M30. Okay, now look at it. M30, you see that there was an M. Don't ever neglect the M. There was an M here, and that was why the thing came up. And remember of the range I talked about. So you see, so that is that. Remember, finally after the why this thing ranged and finally it now dropped this much was because M15, M30, and H1 finally aligned at -5. So let's go to H1. It was when they finally aligned, and then they gave us this M there. Okay, that was when the thing started coming down. So if you have patience and you see this, be assured that you can sell. Now look at this. You see there is a curve back. Okay, sorry, let's go back there again. So will you make entry when you find a curve back down from -5 or an M from the top of the WPR? What about crash buy, crash and boom buy? The same thing, same as 1 and 2. That is to say, using previous knowledge to determine trend. Still works, drop support and resistance. Number 3, time frame alignment. Make sure that M15 to H4 is all at -95. Now that is, the first one was for sell, it must be at -5. For buying, must be at -95 or close to. At worst, H1 should be at -95. Why was using H1 is because you don't want to do a pick and run. You just want to trade and leave your trade to run. So H1 is good because H1 will allow you to know, to see a bigger picture. M15 and M30 is more like a scalping situation. So H1 is good enough, is suitable for you to allow the trade to run. And remember, my hand is in capital letter. There must be what? A visible support zone in this case, or price must be rejected. So let us assume that we want to start buying. We want to start what? We want to start buying. Let us look at these buys. Okay, let's use these buys. There must be visible support and resistance. Visible support and resistance. And then price must be at that, look at it. There must be visible support and resistance. I'm sure you can use your eye to see it now. There must be visible support and resistance. Some people call it supply and demand. So when you look at that, there must be what? Then you come here. See that there is a W. There is what? W. Okay, there is a cuff. There is what? A cuff or a W. Now look at what I said. I said there must be. Now look at entry. Make entry when you find a cuff. It could be a V cuff. It could be a V cuff back up from 95 or a W from the bottom of the WPR. There must be a V cuff, a cuff, there must be a cuff back or a W. Okay, so there must be a cuff. There must be a significant curve or a W. Like this one is a curve, a V curve. There must be that. And remember that when this thing is here, you must find a suitable support for you to start buying, and you must be patient. The same thing that I'm showing you works with boom and crash, but this is what I will say. Make sure you are using 1 or 2 pair for your trading. Don't jump at every pair so that you'll be focused. I've talked about being smart this year, being specific. Make sure your targets are measurable. Make sure they are achievable. Make sure they are risk sensitive. Your trading is risk sensitive, and then they are time bound. For how long? So if you can put that together and all of this together, it will help. So I want to use the opportunity to apologize for the issues we have in respect to the trades we are giving. If you notice the trade we call, most of the trade will always go back to hit TP, most of them. But because we are considering your small equity, that's why we always give you a tight stop loss. But with this now, we have had to do this research to help you, so that you that are part of the mentorship program, you will also have clear trades with little or zero drawdown. So going forward, you're going to see a lot of improvement in the signal channel. And I don't want you to ever give up. I'm doing this because I love you and I want you to succeed. It's not necessarily about how much money you will make at a time. It's about the consistency of making money. So I wish you well, and please do exactly what I've done. Watch this video again and then ask question in the mentorship group. That is, if you are part of the mentorship group. I had to do this because I don't want to have exclusive classes. I just had to record it so that you can always refer to this. Do the settings. I've taken time from the beginning to explain how you do the settings, how you can use two windows in one empty file, and then ask your questions. We're going to do more on this, and all our calls will be primarily based on this. This is very suitable for entry and exit, and I know that this will help you to succeed. So going forward, we're going to use this for entry, but remember, all I have taught you is still very useful, and I'm still using it. That's why I say use two windows, or you can add the WPR to your existing window. But just I don't want it to be too boxed up for you. That's why I said separate it and just put this. So even with this, you can trade, and then this will help you to have tight stop loss, because your stop loss will always be below your resistance, below your support or above your resistance if you're selling. So your stop loss will be tighter, and you don't take any trade in the middle. Now let me talk about the pivot. Thank you. And before I go, let me talk about the pivot. You see, the pivot is a point at which market will most likely turn. For example, you see this comes, it bounces at the pivot. What does the pivot do? Anytime you are buying or you're selling, let's use sell for example, and you start selling, please take your profit as you see the WPL approaching your pivot. Pivot is a point of turning. It's a point where there could be a retracement. So if you were selling, let's say from the top here, and then as you were selling, as it approaches your pivot, please close your profit and wait for it to break that pivot. If it breaks the pivot and come down, you can make another entry till it gets here. But like in this case, if you see you were selling and then it gets to pivot, it start going back up again. Okay, so always take your profit at the pivot using H1. Okay, don't use pivot with M15 or M30. Make sure your pivot is at H1, as in your consideration of pivot is using H1 time frame. So that's what the pivot is, a point at which market may likely retrace, or there may be a pullback. So don't ever forget that. Once again, my name is Michael Essien. If you want to learn how to trade, you want to be a part of this community where we're helping people, we're guiding people, then we're encouraging people to trade, you can join the link, the link from the description, part of this video. I wish you well, and I pray God bless you. Thank you very much, and do have a great time. Cheers.